Hey everybody, this is Jose Blasco. We are about to get started. As always, before we start, it's always good to have a quick sound check. So this is the time. Please type a quick hello on the chat box. That tells me hello. And also it tells me that you hear me. So we are ready to get started on time. Please do that. That is greatly appreciated. And we got like 20 something seconds to go and we begin. Thank you so much. How are you, Mark? Good to see you. Very good. Thanks for that. Cool. Jeff, good to see you as well. Wonderful. Getting close, 5 seconds, and we start, guys. Very good. Top of the hour, time to get started. Welcome, everybody. Today is May 5, 2022. This is Options with Options. This is the live trading sessions that we run where we look at the options markets and we prepare ourselves to take trades. We review trades that we have running already. We talk about trading options and all of the above. Okay, but before we get started, we have a disclaimer on the upper left side of the screen. So I am highlighting this now. Please read it carefully. This is important information. Do not skip it. It's important. And apart from that, not sure if I said my name is Jose Blasco. I think I didn't say that today, which I guess is obvious because it's written on the screen. But just in case, if you're new to the session, pleasure to meet you here, and looking forward to your comments and questions. Everybody, please do not be shy and work with me on developing yourself, guys. I can help you better if you interact with me, okay? Counting on that. Christian, how are you? Mark, you did not get filled on the Iron Condor with Lulu. Same for you, Christian. Same for you, Jeff. I get it. Liquidity was a concern yesterday, isn't it? So I get you. My advice was, just be patient there until you get filled. And of course, the outcome of that sometimes is not getting filled. Okay, but it's okay. Market conditions, to be honest, as we'll see today, are just as good as yesterday to look for that type of trade. So we'll be looking at more opportunities. Okay, so no worries. Hopefully, yesterday was still, a good experience, a good learning opportunity as well. Okay. Good. So agenda for today, we'll look at the market, review the trades, and then look for new market opportunities. We'll do that. The trade review is going to take very little time, and therefore we'll spend most of the time on building new trades. The question page, this is something important for all of you to know. If you are attending the sessions in a regular basis, you know this by heart. tradewithufos.com/Jose if you are new to the sessions. It's important that you know this page exists because you can come in here, scroll down all the way to the bottom, and here is your question section where you could look for answers. And if the answers are not there, you can actually type your question so the answers will be added. Okay. Great way to interact, great way to learn from other community members, great way to help other community members to learn. So please use this page. That's a great way to interact with us, even though, of course, you're welcome to send an email if you prefer to do it that way. Here we go. So now let's begin with our market analysis. Okay, and yesterday, if you recall, I said something I normally don't pay too much attention to, or I do pay attention, but don't give too much importance to, which was the Fed announcement. But yesterday I did, and I expected it to be a spicy one. And of course, in trading, sometimes you're right, sometimes you're wrong. In this case, I was absolutely right on a pretty intense level of volatility that took place as a consequence of such event. The S&P shooted up, I believe it was around 3% up, something like that, which is really not a joke. But still, when you look at the price action and you look at the statistics built in AutoClimate, notice that we did go from a down climate to an up climate. Okay, so that was a consequence of, number one, having such an extended and tired climate that was statistically reaching its end. But on top of that, the Fed, did help price to go high, very, very quickly. Okay, so you would expect that such a speed of movement to the upside would be seen from AutoClimate as a very strong, impulsive type of market movement. But the reality is that AutoClimate didn't perceive it like that. And we know that because the dot that we got today is a thin dot. It's not a thick dot. So I'm not too impressed. Okay, we do have a change of climate, but that change of climate does not gives us the opportunity to really attack and go long very aggressively just as of yet. Okay, it's similar to what happened here when the climate started with thin dots, and finally then we got more confirmation that helped for a longer duration of a climate. But at this moment in time, we don't have such confirmation yet, and we still need to act very cautiously even though we had a change of climate. Okay, now on top of that, and also in line with what I said yesterday, today, even with that magic move to the upside, we still have implied volatility for the puts, the gray line, above the blue line. And that means that there are sellers in the market. Okay, there are sellers in the market. So this, together with the fact that the dot is thin, really is putting me in a position where my favorite choice here would be to do non-directional trading. And if, let's say, tomorrow the climate confirms itself as back to red, so now we are back in a down climate, and then with sellers in the market and a confirmed down climate, I'd be delighted to get aggressively directional to the downside. But we don't have any of that. Okay, the climate is still blue, and when it becomes red, we will know, only then we will know if the gray line is above the blue or the blue line is above the gray. Okay, so we need to act a little bit of still a bit more patience. The market action that is happening today is definitely very strong as well. We have a -3% also going down. So yesterday +3% going up, today -3% going down. Again, typically when markets move too far too fast, it's not sustainable. This is a great example of that. Just like when the market was moving very fast to the downside, it came back up very fast, and now it's coming back down very fast. Okay, so all of these, when processed by AutoClimate, is basically telling us not confirmed. Okay, so very, very important to understand that. Okay, questions here? No worries, Christian. Mark, I keep thinking about a long-term synthetic short alternative. Why not? In any case, the time frame that I am utilizing for the trades, Mark, is a daily time frame. So what I just explained that is happening on a daily time frame would be subject of planning swing trades, if you wish. You are using the term long term, which of course for different traders that term may mean something different. For some traders, long term means a week. So, but for other traders, long term means a year, right? So in that sense, it'd be good that you define that, Mark, because my analysis from today really is not to get you all, in bearish mode. So you short everything that is moving out there and you keep it short for 5 years. That's not what I'm talking about here. We are analyzing the daily time frame, and we may have a cycle or 2 or 3 cycles of down climates. But based on the current statistics, a normal down cycle is 3 days, right? So even if we have a few, we may be going down for a month and then back up for a longer term move. Okay, so again, based on the time frames that I'm utilizing in the sessions, I would be cautious to call this a long-term type of scenario or a trade opportunity. Okay, what my comment was more in that swing trading type of style on how to trade. Okay, so keep that in mind. Yes, Christian. Yes, absolutely, absolutely. And I love the word you're using there with your comment about discipline. Okay, indeed, the tools are forcing us to take action when statistically we have an edge. Therefore, the tools are forcing us to not to take action if there is no edge. Okay, and that forces you to be patient. That forces you to sit on your hands, which is probably one of the most difficult things to do in trading, but certainly tremendously important to learn that skill, to learn the importance of patience. And basically that is learned by applying it. And then when you see the results, then you realize, what, patience pays. And then it becomes effortless. But until then, especially if you are very passionate as a trader, the temptation to just click the button is very, very great. Okay, and therefore we need to control that, and hopefully these sessions help you with that, and also of course the tools. Okay, great one, great comment there, Christian. Yeah, and also great that you guys are sharing some price points that could be important as well for support. and so on. And by the way, I didn't ask you this week, but I'm not sure if you guys have been meeting in the traders meeting room or you haven't. But I'd love to know more about that. If you guys are meeting, if you guys are interacting with each other, let me know. And if you are not doing it because there is something that is not convenient for you or something, just make sure you let me know so I can address that. Okay. The myth of a speed bump below the previous major pivot low is right at the UFO. Get you, Joe, get you. Yeah, and again, we can look at this in many different formats. That's the beauty of trading, that you can have different methodologies that tell you the same thing. You can also have different methodologies that contradict each other. So there is no right or wrong. Okay, there is odds, there is risk, there is reward, and when you combine the three of them, you end up with a profitable methodology. And of course, with the patience and the control over human emotions. But basically, we started an Elliott wave turning point today. The target is down here around 400 something, which is lining up with the 400 mark that you guys pointed at, which again, if you project out of this pivot low, you have speed bumps and you have UFOs. So again, it would not be a surprise that price stretches all the way to this lower colored pink area, and somewhere from here comes back higher. And again, depending on price action, depending on climate, options data, etc., that may then very easily become an up climate, leading into longer term opportunities to the upside. This could certainly be the case. Okay, so we just need to watch for it, not to anticipate it from a point of view of hope, but anticipate it from a point of view of being prepared. So if these type of market setups are happening, we take advantage with decision instead of being paralyzed, observing it, and then we miss the move, and then it's a problem. Okay, cool, very good. So this is what we have with the markets. Okay, now when looking at the volume map, okay, today implied volatility for calls and puts is pointing at 27. Lots of things are happening here. Okay, lots of things are happening here. So if I was to let me do this. Let me change symbol and just force that the volume map reloads. Here we go. So we have 27 and 27 for the implied volatility of the calls and the puts. Yes. Okay. So while on the 3-day average, the puts are winning. Okay, there is a little bit more of bearish sentiment than bullish. In today's action, it's interesting to see that while the market is falling hard, 3.41% down at this moment in time, the amount of buyers and sellers of options is basically equal. Okay, basically equal. So that could be seen as almost bullish. Okay, but again, you cannot, just jump on it just because it looks like. We need to wait for the proper indications. And again, the set of rules I use in my case, I use the 3-day average, just to make myself a little more. Not sure slow is the right word, but just look for a little bit more evidence, a little bit more confirmation instead of acting too soon. Okay. But anyway, so we can see great 2.9, 2.3, 4.4 more puts than calls traded, okay, which is a great quantity. We can see the volumes on the put side surpassing the average, not on the call side. So it's all about puts. Okay, it's all about puts. But at the same time, you can see how the implied volatility is equal, right? So which means that many of those puts are being sold, while many are also being bought. Difficult to anticipate what's going to happen, but so far it's really looking, that some bullishness is trying to come into the marketplace. It's going to be very interesting to watch it into the following days, Friday, Monday, and see how all of this confirms itself. Again, tomorrow we may have a confirmed red dot here. Okay, so be ready for that. Or the market, towards the end of the day, lots of profit taking, new buy on fillers come in, price goes back higher, and tomorrow then you have a confirmed blue dot. So really anything could happen. Okay, that's why today the idea is to rely on non-directional trading, just like what we did yesterday, because while it looked for a moment that the market environment was going to change with the close yesterday, with the price action today, that basically it's gone. Okay, so now from a volatility point of view, the beauty is that this huge drop of in price, it's bringing The prices of the options high, very high, around 31%, about to enter UFOs and therefore about to start falling. So it's actually a very, very good time because of all of those reasons to start looking at iron condors like what we did yesterday. And that's what I'm going to do today again. Okay. More comments there. And then I'm going to be looking at the trades that we have too. So, hey, Joanne, good to see you. Good to see you. Joe. Yes, Joe suggests that we talk about the meeting room. Got you. Um, yeah, the thing is that the meeting room is open 24 hours, so you guys need to get organized to get in there. And again, because of privacy laws, our company is not allowed to share your contact information, so you need to share it between you guys. If you want to type it on the chat box right now, so just know that this chat is private, even when the recordings are reposted. So the chat is not visible. So basically, this is something between you guys. And if you want to share information for you to get in touch and get organized on when to meet in the traders meeting room, you can certainly do that. Okay, for the ones of you that are watching this and you don't know what we're talking about, so when you go to our page and you scroll down all the way to the bottom, here in the very bottom part in the footer of the web page, it says traders meetings. So if you click on this, basically it will bring you to a place where 1, 2, 3, you have to log in. And once you log in that gray box, you will have basically a meeting room where you type your name, you enter, and you guys can share screen, use video, use chat, and you can even record the sessions if you want. So you can do all of this in here, okay? But this is a place for you to meet between you guys, okay? We don't need to be there. I don't need to be there. Other instructors don't need to be there. It's for you. So you need to get organized for that. And it'd be great that you have a few meetings. So later you can come back to me with, hey, this is what's working well for us. This is what's not. And then in that sense, we can coordinate and make changes if needed to make it better. Okay, so Christian is suggesting to set a regular time. But to be honest, I think that also makes sense because just like trading is all about routines, this meeting and join your trading bodies to review trades and plan trades together. It's also about routine. So maybe one way on how you guys can approach it is every day at whatever time you meet. Good one. If I was to make a suggestion, I would say that normally we run live trading at 9 a.m. New York time. We run live trading at 11 a.m. New York time, but we don't at 10 a.m. So maybe 10 a.m. New York time could be a good time because there is nothing live running, so you guys could meet and not miss anything. And so that could be a good idea. But also you can meet earlier, or if you're in other places in the world that is not US. Again, the room is open 24 hours. Okay, so you guys get organized, and as you start meeting and you realize what works, what doesn't, let me know. So we'll keep working on making it better for you guys. Good. Yes, and Christian also says right after the session, that would be 12 p.m. your time. Why not? Okay, so you guys basically get organized, speak up, do not be shy, so you can do it. No, there is no alert notification. I'm not sure if that feature is available. It's a great suggestion, to be honest. So when someone is meeting, everyone gets alerted. So I'll look into that. On the top of my mind, I would say I think it would be a complicated feature, and also probably it would not be welcome by everybody because now everybody will get many emails every day, and next thing you know, some users, some members of the community may prefer to not subscribe to that or something like that. So I'm not sure that would be good, but I'll look into what's possible, from an alert point of view. And if there is anything possible, I will let you know. Great. And it seems that you guys are planning to meet after the session. So great. Wonderful. Perfect. Okay, let's go back to the charts. Okay. Trades. We have two trades running at this moment in time, Verizon and Lulu. So if we look at Verizon, okay, so the trade is looking much better than the prior days because of two reasons. First, that stock is showing strength, which is not a surprise. Verizon belongs to a strong sector. We scan for Verizon in this fashion. So notice how the S&P is falling very hard today, and that stock is only falling 0.95%. So it's great to see the stock is showing strength. If the stock was to fall more, it's also great to see that we have UFOs there with almost 60% probability. So that's pretty powerful stuff for a stock. And again, if this starts going higher, we're going to be able to act on it. Okay, so we just need a bit more of a push for this trade to start putting a smile on our face, and we can start working on it in a way on where we're going to reduce risk, increase performance, reduce margin, and things of that sort. At this moment in time, still a bit too soon, so nothing to be done here. Just a couple of good news, as I mentioned. If we look at what was the other trade? I forgot. Lulu, yes, of course. If we look at Lulu, okay, and I go back to the chart that we were using yesterday. So Lulu, it's actually being hit extremely hard with a drop of 6.5% today. So this is not what you want to see when you do a non-directional trade, okay? But good news, yesterday, I got filled. It seems that most of you didn't, which I'm not too surprised given the wide spreads, unfortunately, on the expiration day we selected. Now, I got filled at a terrible price, if you remember. So if you had tried to get 71 cents, which I got, probably you would have got filled, but that would have broken the rules. I did it so I can work on the trade during the life of the trade. This is a great example. A trade that is moving 6.5% against us when you want it to be non-directional. That's great. That hopefully will give us opportunity to tweak it and try to work on it on helping the trade if the trade continues moving again, aggressively against the range that we expected to stay within. Notice that so far it's all okay, in the sense that the probability range is still not crossing the purple line, so no action needs to be taken. But the other thing is that if you recall yesterday, the red line, okay, in the cone was kind of like outside. Okay, kind of like outside, where now notice how it went inside, okay, the blue zone, which means that we got some volatility shrinkage coming in, and that can be seen in the form of $63.50 of positive P&L today, basically bringing this trade to kind of break even, which is great because that stock has moved 6.5% away from the midpoint of the range. But guess what? The trade is not really suffering. So this is the drop on volatility, which we had experienced yesterday, which is again the reason why we do the trades the way we do. We scan with the matrix the way we scan. All of those are components that are positioned in a way where typically they would help the trade. Of course, there may be cases where next thing you know, now volatility has risen, and everything works against you. Of course, that could happen. Beauty is that we know those trades have a limited risk, which is distance between strikes minus the credit received. So worst case of the worst cases ever, the most you can lose is limited no matter what. So that's good. But at the same time, during the life of the trade, you have all those various moving parts which may help you. Okay, so happy I was able to execute this trade yesterday, because probably into next week we may need to act on it in certain shape or form. So we'll see that. And we'll talk about it next week. So far for today, nothing to be done. Why? Because the probability cone, it's not surpassing the purple line on the expiration date. Okay, not surpassing it. Therefore, we are still within the range where price should stay, and therefore all is good. Okay, with all of this said, I'm done with the review and the market commentaries and dealing with the initial comments on the chat box, and therefore it's time to start looking for trades. As I said before, again, today is going to be a very similar day to yesterday. It's going to be all about building iron condors, and we're going to start doing it right now. Okay, so I have the same settings I had yesterday, so to be honest, it's very simple. I got a bunch of symbols as you can see here, but that's also because I didn't import my penny increment options list, which again, that's me being just very picky. Okay, if I do that, of course, my list is greatly reduced. Okay, but again, let's start from zero, where I'm going to be scanning for, talking about being picky. I'm going to start very, very picky. I may get one or no symbols. If I shoot for mean range greater than 80, let's take a look. Okay, nothing, not surprised, I was expecting it. Second way on how to filter, it's CAV mean minus historic above 2 standard deviation. And in this case, we got ANF. Okay, so let's take a look at ANF on the chart. ANF is a $34 stock. So in this sense, yeah, so we really need a lot of premium to make this trade work, unless the earnings date is very far and we can use further out expiration dates. Then it's going to be difficult. Okay, but could be okay. So let's take a look. Okay, well, earnings are happening on the 25, so the further I can go is 520. So I'm not really sure it's gonna work. Okay, but let's go ahead and try. So 520. Let's get spread builder. We are looking for short iron condors. We are looking for May 13 and May 20, not May 27. Okay, because earnings are happening, before that. And we're gonna go for, wow, interesting. Oh, okay, I got the symbol Lulu. It's like, I'm like, how can that be possible? That's not possible. Okay, yes, now you could. So we got short iron condor, we got May 13 and May 20. Looking at minimum range of 1, maximum range of 1. Okay, this is a $34 stock. I don't want to take great risk per contract. I want to keep it relatively small. I'm going to activate the filters, and the filter I want to load is my iron condor filter. Click OK. And we're going to load 99 combinations. I'm going to maximize this and sort based on those filters and see what passes. Okay, and we have a couple of cases that pass with May 13 and a few more cases with May 20. Okay, so let's take a look at May 13 on the chart and let's see where the red line is telling us. So 38.9 and 30.9. So 38.9, nothing. And if we look at May 20, we got 38 and 39, which is not good because May 20 here, it's pointing at 40 point something. Okay, and we only got 38, 39. So not enough premium with ANF, which again, it's the consequence of not enough premium, but also it's the consequence of the fact that this is a 30 something dollar stock. And of course, options are a derivative asset that derives their value from the underlying. So if the underlying is cheap, it's also more difficult to get more premium. Okay, okay, no problem. I'm just going through the process one step at a time. So what else are we going to do? Well, we're going to be looking at the third way on how to look at high premiums. Okay, first one was CAV mean greater than 80. Second was CAV mean minus historic above 2 standard deviation. The third method that we use is CAV mean to be top percent increase in the last 5 days for the CAV mean. Okay, this is typically the one that produces the greatest amount of opportunities, not always, but typically yes. Here we go. So now we got a bunch, and we're gonna start by looking at we got a bunch of symbols which are okay. Like I'm looking at the last column, okay? In case you haven't noticed with my mouse. So for example, ANF is 34. We just look at it. Harley Davidson, we could certainly look at it, but it's 38. So little premium. Las Vegas Sands 35, little premium. So we may have other stocks such as IBM, $100+ stocks. Those are typically more interesting. Okay, so I'm going to start with IBM, for example, and I'm going to start shooting for plus something like that, just so I don't make the trades too expensive from a risk point of view. And certainly, delighted to go for $300 per share and even more, because then you use less contracts per trade, which is even better, but also it has more risk. And I want to be sensitive of some of you in the community that may be in learning stages, and maybe there are certain trades that you don't feel comfortable taking because they imply too much risk. So, I'm going to start with 100, something like that, which should be okay. Okay. Yeah, so Mark is available, Christian is available. That's great, guys. Great. I'm eager to hear back from you guys to see how it went. Okay, you guys let me know. So anyway, IBM, what do we have? Well, earnings for IBM are happening very far away. Okay, we are talking about 7/18, so we can actually use expiration dates all the way to 7:15. Okay, but I want to be a bit more picky here with my analysis. While I use the matrix and I come up with a list, now I'm gonna be just a bit pickier, which is I'm gonna be trying to find opportunities where the red line is beyond the blue line. Okay, nothing wrong with planning on IBM and we may get a good trade, but again, if the red line is beyond the blue line, it's just giving me an extra advantage in the sense that when implied volatility is very much stretched, it tends to go back to the mean, right? And having the red line beyond the blue lines, it's giving me a stronger indication of stretched implied volatility. Okay, here you can see that implied volatility is not bad at all, but you can see how the implied volatility for the calls for whatever region is so much less than the puts. So the mean is more or less here. And that's why the red line is somewhere there. So because Condor Condor uses calls and puts both, I'd love to find calls and puts to be higher priced. And therefore, one easy way to find that is to have the red line beyond the blue lines. So not sure that this is going to happen or not, but it takes no time to just go through the symbols. And again, I'm going to be focusing on 100 plus. So we got Philip Morris is the next one. So let's take a look at Philip Morris. So Philip Morris, the red line is in between. What else do we got? We got 70. It's not 100 plus, but it's 70. So Textron. So let's take a look at this one. With Textron, the red line is inside, very much inside, so that's less interesting. With BPOP, let's take a look. The red line is closer to the extreme, so I would be more inclined to look at this one, even though, to be honest, I never did an Aaron Condor on that stock, so I'm not sure about liquidity parameters. We'll see that in a moment. Yeah, and the other stocks are like 200, 300. So you know what? Let's start with BPOP and let's see what happens with that particular stock, okay? So let's begin. Well, you know what? No, I'm not going to do it. Why? I'm just noticing that, notice the amount of vertical lines that we got. We got a few, meaning that the only expiration dates that are available are monthly expiration dates. We don't have daily expiration dates, okay? Did you use TSL in this scan? Yes. In this scan, I'm looking at daily neutral, weekly neutral. Okay, that's how I'm scanning. Okay, so I was getting ready to look at BPOP, but no, we're not going to look at BPOP. Okay, so then I'm going to shoot for $200 stocks and see what happens. So we got McDonald's. Okay, so let's take a look at McDonald's. Where are we at with McDonald's? Red line is beyond. Okay, great. So it's going to be a bit more risk because it's a $200+ stock. Okay, but probably better market conditions to do this trade, and also certainly in most cases a liquid instrument. Okay, so let's go with McDonald's. We also have weekly expiration dates. You can see here how we got many of those vertical lines. I think I said horizontals earlier. I meant vertical lines. And therefore that means that we have weekly expiration dates. So that's where the starting point is going to be. Earnings are happening all the way on 7/27, which means I can use all the way to July 15 for me to put this trade in place. So I'm going to be looking at a skew, okay, with McDonald's. Okay, looking at a skew with McDonald's, and we are going to be looking at 13. We're going to look at 20, 27, June 3, June 10, June 17, June 24. Okay, so far this is behaving just like a book example of what a volatility smile is. The shorter expiration date has more volatility, more implied volatility, and the further we go, the less volatility we have. Curious to see what if we go to July 15. Should be even lower. Well, actually, July 15 got more meat. Okay, July 15 got more meat. So yeah, so then I'm gonna ignore June 24. Okay, and from June 10, I'm just gonna move all the way to July 15. Okay, so those are the expiration dates I'm gonna use. So basically, I'm selecting 6 expiration dates: May 13, May 20, May 27, June 3, June 10, and July 15. Okay, so here we go. Let's go for it. McDonald's, spread builder, MCD, that's the symbol. Expiration date, we said May 13, May 20, 27, June 3, June 10. Okay, and July 15. Is that what I said? June 10 and July 15. Yes, that's what I said. Okay, great. So here we go. Now, minimum strike price increment 2, maximum, I'll leave it as 2.5. Okay, just to try to keep the risk as low as possible. So let's build 99 of those condors and let's sort based on the filtering condition and see what passes and what doesn't. So with May 13, we got a bunch of passes. So let's go ahead and take a look at May 13 to see what the statistical range would be. And the statistical range on May 13 is 261 to 39. So we are looking at 261, 261, 261, 261, 261, 261. We got 260.54 almost. I mean, you could take it, okay? But anyway, it's not meeting the condition. If you were to take it, it's not the end of the world. And also we said the minimum is 239, and actually that one is 239. So actually this one, if you were to take it, makes sense. Liquidity 89, 1, 117, 130 something, 47, 58, 27, 33. There is volume, there is open interest. So this one could make sense. I'm just gonna take it so we can analyze that later. Coming back to the next expiration date, we're gonna review what if we do May 20. Okay, so we are filtering. Okay, and with May 20, of course, the range is gonna be a bit wider. So 20 is here now, and we are talking about 265. Okay, so we're looking at 265, almost 265. So looking at 265, 265. Where are you? 265, 265, 263, 265 right here. Okay, with May 20. Okay, now what about the bottom part? So the bottom part, 265, 235. So 265, 236, no good. 265. Okay, and now we are moving into June 3. Okay, yeah, so May 20 didn't work. So we're gonna look at May 27. Let's resort all the results. And let's look at May 27. It was almost there. So May 27, which is right here, is now suggesting a statistical range of 268. Okay, so let's go to 268. Do we have 268? 266? Oh, wait a moment. We are dealing now with June 3. Okay, so May 27 doesn't work. What about June 3? This is the process that we follow. So, if there is any expiration date, any strike price that provides what we call price anomaly, which equals advantage, equals an edge. So we spot that, okay? We spot, and therefore we build a trade around that, which again puts us in a more advantageous position at the start, okay? So June 3 right here. So we are talking about 271, okay? 271. So let's take a look at 271. Do we have anything that provides 271 with June 3? With June 3, 267. Oh, and that's June 10. Okay. Oh, wait a moment. Yeah, 271 here. I'm not sure why I missed that one. 271 is right here. So now the bottom is 233 here. So let's take a look. June 3, the bottom should be 230. And here the bottom next to 271 is 233, 234, which is too high. We needed 230. Okay, so June 3 not providing enough premium. So we go for June 10. So we have one opportunity, and that should be valid. Okay. So now we got June 10. So with June 10, oh, that's not, and July 15, 272 is the maximum we get. So what if I go for $10? Do I get more? I see. 272 is the highest we get. Yeah, so that's not gonna work. Okay, so we found the best, which is only one. Okay, is that one. So let's assess and analyze if the trade is a valid one. Now this is what I would call an aggressive iron condor, and nothing wrong with the word aggressive. We are traders, but let me explain what I mean. This is a 1 week iron condor, and typically the issue with running a 1 week iron condor is that you cannot do too much to help it if it goes against you, right? Because if you try to tweak it or roll it or whatever, so typically because time decay goes so fast, so the units that you would add to the equation to try to help the trade to do better because the market is moving in a way that is unexpected, well, those units are going to have much less premium left given the fast rate of time decay with only 1 week to go. And so you have the beauty that if everything goes well, this iron condor will start showing very nice P&L very quickly. But if the market starts not behaving well, so then there is little you can do to help it. Okay, so I'll make an extra comment to this later, but just keep that in mind as I start reviewing and building this trade to see if we approve it or not. I would say probably we will, but again, all of this now depends on the UFOs. Do we have UFOs in the right price point? Okay, so this is a May 13 type of trade. So May 13, the upper part of the range is here. Okay, May 13, the bottom part of the range is here. Okay, so I'm gonna move to a 55-minute time frame to look for UFOs above and below, and I need at least two above and two below. They provide 56% probability, which is great. Okay, and if I was to look at the ones above and below, so notice how the ones above are located here, and the ones below are more conveniently located. Okay, they are more conveniently located, but at the same time, if I pick this one here, for example, this is the nearest one below, is more conveniently located. But if I define the range the way I just did, so now I end up in a situation where the current price is closer to the bottom part than the upper part. Okay, so in a case like that, if you had no other choice, you would probably want to rely on lower UFOs below to center the current price better in the range, defining the range by the price zone between the upper and the bottom purple lines. Okay, not the red lines, which is centered, but the purple lines. Okay, so in other words, you want the distance between the red to the purple above to be similar to the red and the purple below, which in this case is not. Okay, so probably relying on that UFO would be a better choice. But at the same time, the wider the range, the more problematic, especially if you have to tweak. And on top of that, even more problematic if you have less time to expiration, which is our case. So what would I like to do here is to explore other time frames, such as, for example, 89, and see if we have other UFOs in other places that could allow us to shrink this range in a way that is more beneficial to the trade. Okay, so on the upper part is actually, well, actually in the upper part, yes, we do have a choice. The upper part, we could actually bring this here, okay, which is better, but it gives extremely tiny room for breathing space. And unfortunately, on the bottom part, I cannot, okay, because if I was to go to the bottom part of this, I would be within the red line. I need to be beyond the red line, not within. So let me take a look at another time frame. Okay, I'm gonna do 144. I started with 55, I'm going up. It's okay as well to go down. Okay, and again, on the upper part, there is nothing new. On the bottom part, I got UFOs, but they would basically force me to push the line lower. Okay, so that's not what I want. I want to push the line higher. That's what I'm looking for. So let's take a look at 233. I'm using flip time frames as always. Setting the range is very important to get more probabilities in your favor for the price action to be actually range bound instead of trending, but also because the range help us to define our trade management actions, right? So remember earlier, a moment ago with Lulu, we talked about how the probability cone crosses the purple line. So therefore the location of the purple line has a direct impact on the trade management. Okay, so that's why I am working around trying to have a proper setup where my lines are in the right place, knowing that I am relying on UFOs instead of just draw the lines wherever I want just because I want. I need those UFOs. So on the 233-minute time frame, same problem. I will need to push my zone lower and above. I got nothing. Okay, so then I'm going to move to the 34-minute time frame, which is now I'm going down, starting from 55. I'm going down, and let's see what I have. And in this case, same story. I will need to push my line lower on the upper part. Nothing new. And 21-minute time frame is the last attempt for me. So on the 21-minute time frame, a little bit of a good news here. Okay, where I could bring my line here. Okay, that's a bit closer. Okay, and to be honest, if I now was to do this, now I find a setup which I'm very comfortable with, where the distance between the red and the purple and the distance between the red and the purple seem to be similar. And therefore, if I go back to my daily time frame, one more example where patience pay, right? If we go back to the daily time frame, so now you can see how the range, okay, from here all the way to the expression there, which is here. So that range, okay, makes the current price to be very well centered with the same distance above and below. Again, it's not critical to start exactly in the center point, but it does help the trade, and therefore that's what I'm trying to do. Now, if I was to apply this with this particular setup, so we're having an upper break-even point of 260.52. So 260.52, it's somewhere here. Yeah, somewhere here, just a little lower, just a little below the red line, something like that. Okay, and sorry, not like that. And the bottom break-even point is 239.49, which 239.49, it's a bit below the red line. So this is now our profit zone. Okay, we need to end up in here. Okay, now trade management only takes place if the cone crosses the purple line. Okay? If the cone crosses the purple line prior to the expiration date, by the way, which is that vertical line. Okay, which obviously is not the case at this moment. Okay, so now if we do this, we are gonna collect $54. The risk of this trade is distance between strikes, which is 2.5. Okay? 2.5, from 40 to 37.5, from 60 to 62.5 is 2.5. Our rule says that we want 15% of, we want at least 15% of that, isn't it? So 15% of 2.5 is 37.5, and the current premium available, if we get the midpoint, is 53. So the trade is indeed approved. Okay, the trade is indeed approved based on the rules I use, and therefore I'm now gonna execute this trade using Thinkorswim. This is a McDonald's trade using May 13 expiration, where on the upper part we're using 62.5 and 60. Okay, and on the bottom part, on the put side, we're using 40 and 37.5. Okay, that's our Condor. That here it shows us 57. Okay, of credit. Again, we'll see how much we get when we get filled. But again, the beauty here is that the difference between the bid and the ask is from 52 to 57. So we are dealing with something that is potentially quite liquid. Okay. So today I would think that you won't get the issue that we had yesterday with Lulu, where many of you did not get filled. Yesterday we did talk about the problematic liquidity condition of that stock, where today with McDonald's should be an easier one. Okay, so I'm just gonna leave it there just for a second. And again, if I don't get filled, I'll push it because again, I want to have those trades in. So for trade management purposes, I can use them and guide you into different situations that happen during the life of a trade. So I don't care about the price in my case, but please, in your case, make sure you get the best price as possible and be patient on trying to negotiate your entry. There is no need to be in a rush. Okay. Questions, yeah, and if no questions, please, this is a great time for you to give me a confirmation. I'd like everybody, please, to participate with a quick confirmation and say, yes, I got it, I'm okay, I'm comfortable, or not, or this is my question. Even if it's a quick okay, it's very appreciated. So you don't have a rule that requires more than 50% on a 1 week IC. Seems a bit risky. No, I don't have a rule for that, Christian, but I have another rule, which I'm going to explain now, which is the one I said earlier that I will explain in a moment, which has to do with trade management, precisely to counteract a little bit the disadvantage attached to doing such a short-term iron condor, where often you end up with not a great advantage when you tweak it, if you have to tweak it. Okay, so I'm gonna talk about it. Spread is wide, will be difficult to get in the mid. Yeah, well, try, and if it's a bit less than the mid, it's okay. Again, in this case, we are dealing with a liquid instrument. The midpoint, to be honest, it's in a 4-leg trade like an iron condor. Getting the midpoint requires not only lots of patience, but probably also requires that there is an increase of volatility or something like that. Okay, what's happening to the VIX? Let me take a look. The VIX was hitting a red UFO, so we were expecting it to fall. Go, yeah. So it's still there, reacting to the UFO. So yeah, probably a few minutes ago, a bit higher, maybe it would have been easier to get those 59 cents I am bidding. Actually, the real midpoint now is 56, so I don't think I'm going to get filled at 59. So let me try to change that to 56. And again, the minimum is 37 and a half, right? So again, it's okay. It's so good. Let me see if I get filled. In spread, when you use 2 legs, it's easier to get filled. And an iron condor with 4 legs, getting the midpoint really, requires lots of patience and a little bit of a help with a little bit of increase of volatility. Okay, so often you settle for a bit less than the midpoint. Okay, but certainly you don't want too much less than that. You want a good entry price. Okay, because you're gonna pay 4 commissions to get in here. Okay, good, perfect. Okay, so and I guess I can tell that you guys are trying to place the orders. Okay, so the orders that you guys are placing, right, are impacting. A moment ago it was 59, then 56, now 53. That, my friends, is you placing the orders and market makers reacting to your limit orders. Okay, so that's happening. Okay, so let's be patient and cross fingers a little bit here for a little bit of an increase of implied volatility across the board in the market, and then we'll likely start getting filled. If anyone gets filled, let us know. So you guys know, and also that price could be a good reference for the rest of the group. Okay, so let's see what's going to happen here. I'm going to be just a bit more patient than normally with the execution, so I kind of do it more like how I normally do it. Since we still got 8 minutes to go, I can use that time, a little bit of a luxury today. Other times I just push it as a market order, so I get it, which I always tell you never do that, right? Anyway, so come back to this in a moment. Now, the one thing I wanted to say is that, what is our goal here? Well, our minimum rule, right? Our minimum rule is to make 15% of the spread of the raw risk, which is 2.5, which is 37 and a half. That's the minimum we want to make. Now, the beauty and the downside, okay, is, let's start with the beauty, is that the rate of time decay is going to be very strong. So if that stock behaves and stays where it needs to be, which is within the range, we may get this level of profitability like 3, 4, 5 days before the expiration. Okay, maybe on Monday you get that profitability already because you accumulated the weekend time decay, and maybe the stock behave well, maybe the market is coming back up a bit, everything gets calm, the VIX drops. Next thing you know, on Monday or maybe Tuesday, you can close this trade and get this profit, right? Well, if that's the case, one action that makes a lot of sense to me would be just to close it. Okay, we talked about in the past closing it for half of the profit. This is an action I personally do not like. Like if you got filled at 59, which is the current midpoint, half of the profit means that you will make 29.5. Why I don't like that? Because that's not the minimum you want, right? The minimum you want, at least based on my rules, the minimum one is 15%, right? So I will not close it for the mid. But if at any moment in time I got those 37.5 cents of profit, then I would close it. Okay. And again, if you got filled at 59, that means that you buy it back at 21.5. If you got filled at 59, you buy it back at 21.5, then you made 37.5, which is your minimum. So that, to me, it's an action that is wise, that kind of takes care, not exactly, because obviously there is no magic formula that takes care of risk all the time. Jeff, you are in at 59. Very nice price, my friend. Good one, and thanks for sharing. So if you were to have this type of action, it's not that it's fully offsetting your point, Christian, about having more risk, but somehow, as long as time decay and price behavior is working your way just for a few days only, not for the whole time, all the way to expression, you should get to that position where you get those 37.5 and then you take it and run. So then you got what you wanted. And now, if in the latest part of the week, the market was to move against you, where now, because of time decay, there is no premium left in any of those options, and even if you tweak it, you roll it, you fix it, you butterfly it, you whatever, nothing's going to help, right? So guess what? You were out already, and therefore you avoided the problem. So that would be an approach that is halfway between the luxury of doing a longer term iron condor, where you have many weeks where you can keep rolling and tweaking and massaging the trade to a point where you really help it in case it goes against you, versus the problem of a 1 week iron condor, where basically you are left with very few options, especially if the move against you takes place too far down the line, too close to that Friday expiration. Then no matter what you do, it's not going to help because there is no premium left, right? If the move happens early, like let's say tomorrow, the market is moving crazy against you, and you're going to tweak it tomorrow. Well, you're still tweaking something that's still got 1 week of life. And by the way, if it's moving crazy against you, that means that the new option you're going to sell will probably have implied volatility in them. So you are still okay. But if it's somewhere in the middle of next week, middle of next week, end of next week, something like that, so then it's not going to work well at all. Okay. So this is the idea I wanted to share with you, which Christian, it's halfway between what you said and what we normally do, which is a special case for a 1 week iron condor. Good. So we are 4 minutes away from getting filled. I have not got filled. Jeff got filled, but I didn't. So it's time for me to try to. Oh, wait a moment. I got filled. So I don't know how I looked at it. Yes, I got my working orders on top and my field orders below. I got filled. Yes. So I got filled at how much? 59, just like you, Jeff. Great. Perfect. Okay, so let's document the trade. But not only that, I'm also going to place the exit order. So you see how that's done. So first of all, let's document it. So edit. We're going to make this fill price, fill price, fill price, fill price. We start with the put side. So with the put side, I got 137.96. So 0.96 and 137. And on the call side, we got 45 and 27. So 45 and 27. Click OK. Okay, this is my $59 Iron Condor. I'm just going to copy this to the clipboard and save it. And I have it for future reference and so on. But now, again, what is it that I want? Well, remember, the goal is to make 15% of 2.5, which is 37.5. And I got filled at 59. So what's the difference? The difference is 21.5. Okay? Well, just to keep it simple, I'm going to use 21. Okay, also that 0.5, will take care of a little bit of commissions. Okay, so just being a little optimistic here. So 21. So that's my exit price. I want to exit the Condor at 21. So what am I going to do? I'm going to go for McDonald's, select the 4 legs, right click to create a closing order to buy back the Iron Condor, the whole Iron Condor. I'm buying back, and I'm going to buy it back at 21 cents with a good till cancel order. So if it doesn't happen today, but it happens another day, whenever that happens, I'll be out. Okay, so I'm just gonna confirm and send. So the order has been sent. I have my order at which I got filled at 59, and I have an order to exit at 21. The difference is gonna be 38 cents, which is gonna be my profit if that's what's gonna happen. Of course, let's say now McDonald's starts, not behaving the way we want it to behave, and starts moving. Oh, wait a minute, that's the VIX. I'm like, this is not McDonald's. So if McDonald's starts moving outside, starts moving faster than what we want, and the probability con starts crossing the purple line, so then we're gonna have to act on it. Okay, and acting on it means that we're gonna have to roll the units, assuming our rolling rules are met, which I want to address today because we have no time, but we have addressed that in prior sessions. But before you roll, the first thing that you will need to do is come here to your 21-cent order, and you will need to right-click to cancel it, because you cannot roll if you have an order in the system waiting to fill some of the units you own, right? So you will need to cancel such order, and then you would then roll, and then reposition a new order given the new prices you got. Okay, but again, if everything goes according to plan, this order will take care of exiting us at an advantageous price, which meets our rules, which also, removes the risk attached to something bad happens later in the week, and then there is no premium left to defend ourselves. And no matter if you tweak it or you butterfly it, it's not helping. Okay, which is something that we have seen in prior sessions, which was a great lesson to learn. Anyway, with all of this said, we are done for today. Hopefully the session went well. Please give me a little bit of a feedback. How did it go? Too fast, too slow, just fine, just good. I like it, I don't like it. Do it again. No more iron condors, whatever. Just let me know. I'd love to get your feedback. And also, since I am demanding for feedback, later after you guys meet on the in the trade room, go ahead and shoot a message to me if that's okay, guys. A quick email will do, and let me know how it went, and how are things, and how great was your conversation and everything else, and any comment, any suggestion, I'd love to hear. Okay, good, perfect, very good. Mark, thanks for the comment. Patience, my friend. Again, if you got filled at 58 instead of 59 is fine. Even 57 is fine. So don't be over perfectionist, but at the same time, be patient. You have the time, and there is no rush. Okay, so do that well. Very good. Christian, thank you so much. Jeff, thanks as well, my friend. You guys take care, everybody. See you soon. That will be next week. Okay, and for the one of you in the US, make sure you don't miss the Formula One race in Miami. I won't miss it. Take care, everybody. Bye-bye.